Five, four, three, two, one.
Hello and welcome to Money Matters. I'm Sarah Peterson, here with the president and founder of Greenberg Financial Group, Dean Greenberg. How are you today?
I'm good, Sarah. Always good to see you.
Amazing to see you. I am so excited for today's show. We have so much to talk about.
We have a lot to talk about, but you know, I've been doing this for a little over a year and a half now on TV. And it's amazing how many people are starting to pick up and watching it and listening and coming to see us from it. So, you know, a lot of people know I've done radio for 34 years. I'm the type of person, when I start doing something, I keep doing it. And it just seems to work. And I think what people want to hear is just straightforward commentary. What do you think? You know, they don't want to be sold anything. They want to hear, what are you saying? What are you doing? And what are you offering me?
Don't you feel like the shows on television and the radio are both just your way of educating people in a way that we don't have, you know, a formal education?
It's always been that way. The one thing, and I didn't realize it when I started, but I'm always been an educator. If people understand what I'm talking about, it builds a trust. When you try to talk over people, or you leave things out so they don't know everything because you want to be the one that knows everything, it develops a scenario where they don't know it, but there's an uncomfortability there. So I always want people to feel comfortable. I want them to know what we're doing, how we do it. I want them to feel comfortable asking questions all the time. Questions are important. They feel good because really at the end of the day, it's not just about us investing. It's about them feeling less stress, that they can live their retirement without having any ability to be able to have the income they need. And when we have situations like we do now with high inflation, and when things go bad, how are we going to get out of them? How are we going to move forward? And that's what I think our job is more than anything.
Let's talk about that inflation that you were discussing, because this is something that is impacting everyone. And when you're approaching retirement and you are about to be living on a fixed income, how do we approach, you know, these unknown inflationary rises and generate enough income?
Well, it's hard if you're in retirement and all of a sudden you have inflation. The only thing that's good at that time is if you had cash or short-term bonds that you can move into longer-term bonds and be able to get a higher income. Even short-term bonds, 2-year bonds now are paying you 4.5, 4.6 with the government. And, you know, there's annuities that, like MIGAs, that are able to give you almost 5.5%. with tax deferral. So there's ways now you can get more income than we were able to get a few years ago when money markets were less than 1%. And everything was paying you nothing. So at least now there's some income coming to you, but you have to set that portfolio up. The problem is inflation is just as much, so you're not going to keep up with it. The way you keep up with it beforehand is by being able to be in assets for 10, 20, 25 years that actually grow for you. Because once you become retired, you got to be a lot more conservative if you got to live off your portfolio.
So let's back it up then. So when is the perfect time to start planning for your retirement?
Immediately.
Yesterday.
You know, it's like, you know, people always ask that question. It doesn't matter. If you haven't done it, then you have to start today. If you've been doing it, let's see what you've been doing and go forward. The biggest problem you have, as you and I both know, we talk about this a lot, people have 401k plans, no one teaches them what to do. And a lot of that has to do with the Department of Labor and all their rules and regulations on just want to get people in trouble rather than people being able to get real advice from people. And, you know, I'm not too afraid of that. If someone comes to me and wants help, I'm going to help them, you know, because I believe we always put the client first. We always feel what we're doing for the client is right. But you got to know what their risk tolerance is. But there's people that have 15, 20 years or more than 10 years, and they're in a very, very less than conservative, very like almost cash, simple bonds, not making any money for years when they've missed out on so much in the markets.
Well, when you're younger, you have the ability to be a little bit more aggressive and take a little bit more risk, but our risk tolerance does go down approaching, retirement, correct? So we want to make sure that we're always in the appropriate amount of risk at that given time of our life.
Absolutely. But here's the secret that people don't know.
Tell me.
Every time the markets go down, guess what happens?
What?
They go back up. They make a new high. They always make a new high. But you know why they make a new high? If something in the S&P 500 or the Dow Jones is not working, they take it out and they replace it with the companies that are doing well. So the indexes will always go up and make a new high. Think about that. They just switched out, Walgreens. They just put in Walgreens not too long ago. They take Walgreens out of the Dow and they put in Amazon. Think about that. It's crazy. That's how they do it, and that's why we always make new highs. So part of your portfolio always needs to be in part of the indexes.
And how much of this conversation revolves around budgeting? When you get to your fixed income stage of life, how much of that is creating a budget that will account for inflation?
Well, it's funny. That's why you have to always start when someone's retiring. How much income do they need? What kind of lifestyle do they want? What extras? The one thing I do know is that retirement spending is a bell curve, meaning it goes up at the beginnings in your 60s and your 70s, but by the time you hit late 70s and 80s, it's going down. So what you want to do is be able to prepare for that. We have a strategic income model that I started after 2001. And I did this because when everybody got crushed there, they were like, what am I supposed to do? How am I going to do this? And I came up with an idea on how they at least have money for 3 to 5 years of a bond maturing, 1, 2, 3, 4, 5 years, like in that one bucket, so they know they could have money for 5 years and can let the growth come back on the other side. And that has helped a lot of people get through the tough times. Because I don't know when the market's going to go down again. They will. Something will happen. I don't think it's this year. I don't think it's before the election. Yes, we can have a 10, 12% pullback, but I think any problems we have always comes in the first, second year of the next president.
Okay, you just said the word election, but I'm going to take us to a quick commercial break because when we come back, I really want to dive into how we're going to plan for all these unknowns, including the election and how that impacts your finances going into retirement. That phone number on the bottom of your screen is 520-544-4909. Give us a call and we can connect you with somebody at Greenberg Financial Group that will give you a complimentary portfolio analysis that will cost other people, will charge you thousands of dollars or more. Dean is a great guy. He wants to give this to you as part of his education, tell you whether or not you're on the right path to retirement. Please stay with us. When we come back, we're going to get more in depth on how to plan for your retirement. Stay with us.
This is Money Matters with Dean Greenberg of the Greenberg Financial Group. I'm Spike Spangle. Dean, what really got you started in this industry?
It was because I was working for Ford Motor Company. I had ordered all the dealerships and I kind of looked at things and I said, this is not what I want. So I went back and got my MBA in finance and investments and said, I'm going to work on Wall Street. I didn't really know the journey I was going to have until later on, 1987, when the market crashed.
Yeah. Black Monday.
Black Monday. The only person in a company of 600 and some odd brokers. I was buying IBM and I opened a $500,000 account. So they say to me, hey, this is unbelievable. How did you do this? What did you do? I just said, because I thought it was the right thing to do. Down 20%, it was probably a good time to buy, and I was more of a technician and an advisor and an educator at that time. Long story short, they tell me a week later I never owned the stock. The back offices back then could not handle 1 billion shares a day. So a week and a half later, they tell me I don't own it, and I needed to call a client to tell them they didn't own the stock. And I told them that they should pay the client. Next day I came in, my box of stuff was in there, and they told me I was fired. And I went to go see the guy I knew to go get a job. And he said, Dean, I'd hire you tomorrow, but you need to start your own business. I laughed at him and said, how am I going to start my own business? I only have $5,000. He said, figure it out. We're all salesmen. You educate. You care about the markets. You care about your clients. So I guess I figured it out.
Hello and welcome back to Money Matters. I'm Sarah Peterson here with Dean Greenberg of Greenberg Financial Group, and we're getting into it about the elections and how this is going to impact the way we plan for our retirement.
It's funny, leading up to the election, there's a lot of talk about what's going to happen on the other side. But it seems like no matter what, you sort of see the same trend afterwards. You got the problems at the beginning and then you grow. I mean, if you ever told me that Joe Biden was going to get in as president and he was going to make all these changes and we're going to have all this inflation, I'm going to be honest with you, I would have thought the markets would be lower, okay? Somehow the markets have stayed up here. Don't know why, other than the fact that there's these major technology stocks that have done very, very well. But they're not supposed to be, other than this whole new AI thing, and we'll get into that later on. The biggest thing that's going to happen with the election, depending who gets in, is going to be what's going to happen to the sunsetting of the Trump tax cuts. Because that's estate planning we haven't had to worry about for, 10 years almost, okay? Because when that happens, I think it's 2026, you're going to see the estate tax that is $12 million per person now, and there's talk about going down to $1 million. All right? It could go down, they do nothing, to back to $6 million, and that's going to be a problem because people have more money now. So they're going to have to start planning. They're going to have to do more type of planning, so they do it. And then people are like, do I want to make more money? And it's a lot of things. But taxes is going to be the main thing. Because if you keep listening to it, if Biden gets in, what do you have? You have a scenario that all he wants to do is raise taxes on the rich, which to me is a lot of bull. Because if they wanted to, they would. They won't change the carried interest. They had an opportunity. Sinema didn't let that happen. They get paid by the rich, but they would do the rhetoric saying, I think we should pay our fair share. If they wanted to, they can do it by changing the tax law. They won't do it, but they want to use that to be able to get people to come in. They will do stuff, and it's going to hurt, you know who? The lower upper class and the upper middle class. That's who it's going to hurt, because it's going to hurt the people basically making about $300,000, $400,000, $500,000, $600,000 and more. That's who it's going to hurt the most. It seems like a lot of money. In today's inflationary world and what things are costing and doing stuff, it's all relevant. It's all relevant. And what ends up happening is those are the people that are going to get taxed. You're going to see different changes in terms, and it doesn't have to just be taxing on your W-2s and your 1099s. Taxing could be seeing inflation. Which is everything they do by giving away free stuff is inflationary. We have to raise taxes for what? To pay for all the illegal immigrants that are going to all these cities. I don't want to get into politics right now, but it costs us money.
You can't not get into politics and talk about the elections. So
right,
let's just go there.
But what I'm saying is everything costs us money, and how are you going to pay for that? As it is, with interest rates higher, it's over $1 trillion a year we're paying in interest. We can't sustain this. It's going to make us weak at the knees. And I'm a believer you build things with cement steps, meaning if you fall back down, we all do, you only have to fall down 1 or 2 steps. If you build it with a house of cards, which is what we're doing right now, everything collapses and you got to start over. And I'm concerned about that. And there's really no place to hide if this happens.
Let's talk about when we're on the heels of inflation. I've been reading so much about interest rates in terms of credit cards and how people are really feeling the pinch right now. This is, I think, the highest rate of credit card debt we've ever seen. The numbers are staggering because people can't afford their lives. They're continuing to spend, and the rates on the credit cards are so high. So how do we decipher good debt versus bad debt? And, where should we be focused in terms of that?
Let's talk about that first, the other part first. A lot of people got a lot of money from the pandemic. Businesses, individuals, there was a lot of free money. That's what's created this inflationary part when we had a supply problem, right? So now we're going here and we're getting to the end of that. That money isn't there. So what are people doing? They are now going on credit cards to pay for their essential bills because, let's face it, everyone needs food, energy, and they got to pay rent. So they're using credit cards to pay certain things so they have money to pay the other stuff, or they're not. But the interest rates have gone, average interest rates 25, 26% on credit cards. And it's only going to increase because people can't pay them off. And what's happening is savings is going down. When you put that combination together, for the average American, it's terrible. I know you hear every day, right now, because it's a political year, inflation has come down. We brought inflation down. You bring inflation down to 4%. It was 0%. Now it's 4%. Yes, it was 8%. But when you go to the store, I don't think things have come down. I don't think cars have come down. I don't think most things that we use on an individual basis have calmed down. Oil has gone up. Now it's come down, and now it's going back up again. Gasoline prices are still about $4 a gallon.
I just literally was going to say $4 to me it's unacceptable. That's what it was at the tank yesterday.
Right. It was $1.89 a few years ago. All right? There's the problems we have, and they're not fixing it. It's very easy if Congress got behind it. No, what are they worried? What are they concerned about? TikTok. That's what they're worried about. And they get TikTok. This is what bothers me. They can get TikTok done, right? What? In 3 sessions. Sit down, do it, argue about it, and get it done. But they can't fix the border. They can't fix what's going on with education. They can't fix what's going on in inflation. So we have a problem. They don't care about the people. So with that, you have to have a plan on how you're going to invest. And if you don't have that plan, everything's going to bother you. And that's why we always tell people, you better put a plan together so you know during bad times what you can expect.
But let's talk about that plan, because we're not just talking about, okay, a conversation where we sit down, what do you want to do with your life? This is really a concrete plan that's going to take you from where you are to where you want to be, but you have to include all of your financial information in this plan, right? And this is not one plan for everybody. This is an individualized plan that looks at what you want, what you need, what your past, present, and future are.
Yes, you have to do all that. When you take Social Security, if you're already taking Social Security, what's going to happen with these tax changes if they come up? That's going to be the big one for people that are already retired. All right, they got to worry about that. What's the best way to get, if we still have inflation, what's the best way to get more money flowing to you tax deferred or even tax free if you can? Because that way you're going to save on taxes, which what? It increases your net amount of money that you're getting. And we got to put a plan together that meets your needs and your goals. And sometimes you can't, but we can work towards that. But you know what the biggest thing is? Just like we tell the government, you got to stop spending. People don't want to stop spending. If you're in trouble and you're spending more than you can go ahead and stay within a budget, then you're going to be in trouble if you don't do
I always feel like you're talking to me when
I'm
you're
not
saying
talking to you. I'm talking to the people that we actually sit down with, that we say to them, you can keep spending this, you put no money away. Or you can come back and have some money put away. And if they're younger, now they're retired. All right, you're not going to get much more money of this unless you take risk, and you can't handle the risk. So we got to. Where can we sit, and where can we cut some spending back on you?
Well, I think let's get to break in a minute, because on the next segment, I really want to talk about the importance of this plan that we're talking about. This is not just where do you want to go? I want to sit on a beach when I retire. That is a portion of it, but some people think that what they have is a financial plan, and really all they have is a stack of statements, and that's not what we're talking about. So I really want to dive into why having a financial plan is so important and how you are going to approach that with them. And that phone number is 520-544-4909. Stay with us, and when we come back, we're going to talk about how you are going to get on your road to retirement. See you soon.
As a good saver, you've been putting away money during your working years. Studies find that the biggest fear of retirees is running out of money. Market volatility isn't just the downward movement of stock prices, it's the size and frequency of change. The more dramatic the ups and downs, the higher the volatility. This can put savers who are newly retired or a few years away from being retired at greater risk. Today's generation of retirees is not receiving traditional pensions as our parents or grandparents did. Instead, we have retirement accounts such as 401ks or 403bs. These accounts typically expose your money to market risk. The last thing you want right before retirement is to lose a portion of the money you need for income. But how do you turn these accounts into a retirement income? Is it safe to keep all your retirement money sitting in the stock market? The last thing you want is to lose a portion of the money you need for income due to market loss. By working with a financial professional, you can learn how to turn a portion of your savings into an income stream for life and income for the life of your spouse if you're married. We all have moments in our lives when we wish we had taken action sooner. Don't let procrastination reign on your retirement parade. Act now before it's too late. Please call our office to set up your no-cost, no-obligation retirement income review today.
Hello and welcome back to Money Matters. I'm Sarah Peterson here with Dean Greenberg, and we're getting all excited. We always do, talking about how we're going to plan for retirement. And this plan is not just this stack of statements. This plan is something that is created for you and your needs and your wants. And I want you to tell us how Greenberg Financial Group approaches that.
Well, this is what we've created. I've changed my model on how I've been doing things about 3-4 years ago. When I started looking at financial planning applications, and they've gotten so much better. The truth of the matter is, years ago when we did it, it was just for insurance salesmen to sell annuities and insurance. Today, it's real financial planning. You're looking at everything that the person has with the idea to set them up for retirement of where they can be and how much money they can go to. The beauty of it, too, is, and you'll hear it from Todd and Dylan when they come in, is the ability to what ifs. What if I spend more money? How long will it last? What if I spend less money? How long would it last? What if I had something happen like an emergency? How much can I take out at a time? And that it would work. So what happens is, if people hear us, they want the free financial plan, and it's free, okay? And we actually give them the plan. We don't hold it back and say, oh, you have to do business with us. You don't have to do business with us, because we're confident enough that people will do business with us. And if not, then it's okay, because it's building a relationship. So what you do is they come in, they get all this stuff. They got to give us all the financial stuff, because we got to put it in. You hold anything back, then you're not giving us everything, and we don't see the picture. So then we sit down with them. It's about a 3 or 4 time meeting. And then we sit down, and everything's inputted, and they can see the whole picture. And then we go through the financial plan with them. And it's made for them. Then what happens is, now we get it, and it's done, or everything's in. We've went over everything with them. And now we review it, we analyze it, and we come up with a plan for them. Then we meet again. We talk to them about the plan. I like this, I don't like this. I don't think I'm not that conservative. I can use a little bit more here. I think I need more money than that. Whatever it is. So now you have to be changing the plan, and then you change the plan, you get together, and you do it. The big thing with us, it's 2 things at Greenberg Financial Group that we do that I think separates us. It's not only do we do the financial plan, worry about taxes, Social Security, when you should take everything and retirement and income, but we manage the money ourselves. So by managing the money ourselves, we have total control over making any changes met for your individual needs. Because if you give it out to somebody, all you can do is either take some out, put some in, but you can't tell them, oh, I don't want this or I don't want that. So you don't want to be in oil stocks, you're not in oil stocks. You don't want to be in certain things, you're not in those. If you just want ETFs, you got ETFs, depending on your structure of your risk. So that sets us different. And the second thing is, we do worry for you. We mitigate risk. I'm in a cautionary stance right now, but we're still making good money. Because if you're in the right areas, those things will actually make money while the markets are doing this. But we're taking advantage of the fixed income market now with higher interest rates. And we're doing bond ladders in governments and good corporates. Plus, we know if interest rates do come down, which they eventually will, we want to take advantage of that. So it's an entire portfolio taking advantage of all that. And our experience allows us to know things from equity markets to risk, all the way to fixed income markets. And then we tailor-made that portfolio for you.
Just coming back, you said you're in a cautionary stance. Maybe you could expand on that a little bit. Why do you feel a little bit more bearish at the moment?
For everything. When you get 7 stocks making the markets go up, and I know a few others are going now, when you got the debt that we have right now, when we have the ability at any time for us to have a financial crisis, when we could have a war with China, or Iran sets off something that is considered like a dirty bomb, Israel doesn't win the war, Ukraine doesn't win the war, you name it, there's so many things that could happen, not to mention the millions of people coming across here illegally, and we're paying for it, which is just going to topple us down. One of the reasons unemployment is down so much, they're getting jobs. How can they get jobs if they're illegals? I don't understand it. But that's our government. Everyone changes the rules for themselves, and we're not in charge. So at the end of the day, what I'm saying is it's an economy that's built on things that I'm not understanding. So I will try to stay in the stuff to make me money, and I will stay in things that are safe, and I'll be able to put myself in a position that I can make money, but if this thing turns over, then we still have a lot of cash. We have fixed income, we got cash if it does, but I'm still going to be able to participate in the up moves. The other thing is too, when I look at the portfolios, right? You got to trim some of these stocks that have done really well. You got to trim some positions, and people don't trim. It's greed. Just like when it goes down, if you don't have money to buy, how are you going to buy? And we're patient.
So what's the process like when someone calls in and they take it to Greenberg Financial Group, and where do we start? How do I know where to start?
Whoever you're talking to will explain the process to you. Then we'll send you an email with all the things that we're going to do for you and all the things that we need, and then we set an appointment with you. Then you come in, and then we go through all the stuff. We've inputted everything for you, and we talk about it. We get to know you. We start building a relationship.
And this is not something that, once you have your plan, this is not something that you just have and you set it and forget it. This plan needs to be revisited, it evolves with you and the changes in your life.
Especially if you're younger and you're having kids and family things and colleges and stuff. When you're older, what you're doing is trying to, any changes, it's usually health problems and different things like that, or a child might need some more money, or different plans that happen. And so that's what we talk about. What do we need to do to change this or change that? But one of the things that we do is, I told them, every time that we do like an analysis of their risk tolerance and their portfolio, once it's done, we run it through from 2000 all the way up to 2024. I want people to see how much money they would have lost under the plan of risk tolerance that they have in the same plan that they had between 2000 and 2010. That has been the worst era that we've ever gone through as investors, twice down 50%. So if there's too much risk, you lower that risk, because can we have that again? Of course. Maybe we don't, maybe we could, nobody knows, but I want them to know pretty much, can they tolerate a 15%, 20%, 40% move down?
People quite like to make money, but they quite hate to lose it, right? So you always have to look at what you could have lost on the other side.
You have to. And the one thing as a financial advisor that never gets credit for is the things we sell before they go down. The things that go down 50 or 100 points after you sell them, but it doesn't show up because
it's gone.
It's gone, right? But everybody, but when they're going up, you're getting credit for it. But if you don't get out and it turns and goes down, what happens? That's why trimming,
look, we all feel
mitigating
taken
risk
for
is
granted
important.
at some point in our lives. I can speak to that too, but that's a whole nother show. Honestly, there is zero risk in this conversation, and it literally is just a conversation, a cup of coffee, a way to find out whether you are on the right track to where you want to be so that you can enjoy your retirement, and that's really ultimately what we're all going for. That phone number is 520-544-4909. We always run out of time because we have so much to say, but they'll have to tune in on the next show.
Thank you.
Thank you so much, and thank you for always educating us in a way that all of us truly need so that we can enjoy these few moments that we have with our loved ones. Thank you so much for joining us, and we hope to see you soon.